And this is your market update for January 15th, 2015. I'm your host, Mark Yegi, and let's start talking just a little bit about what the heck is going on in the markets today. So the markets right now at 11:13 are down 33 points. Now, I saw them up 70 points this morning, down 70 points after that, then back to positive on the Dow, now down 34. They don't know what the heck's going on. So the market is still building this downtrend. Now remember, there's a 5-day downtrend that's coming into now, but this one's got some smaller price swings, so there's a little less energy in this downtrend. Nonetheless, we are in a red market. That doesn't mean go out and buy stocks and try to pick the bottoms, although we do believe we are hitting a little bit of a bottom. There, it just turned blue. And so as we hit this little bit of a bottom, you're seeing this, it's kind of a wide doji candle. I don't know, for lack of a better term. It's basically even tail on the top, even tail on the bottom, and most of the majority of the trading is happening right in here from the close yesterday. So, okay, what does all that mean? Well, it means we're in a red market, we're in a downtrend, but we are rounding a bottom. We like rounded bottoms, right? Because that generally portends that the sellers are out and people are trying to figure out a bottom, which is the time for them to start buying and building up the right side of the base. But that's a value investor or a speculator's way of investing, trying to pick the bottoms. We don't try to do that. We try to play the market day by day as it comes, which is why we give you these market updates every day. So let's analyze a little bit more. All the averages are rolling over. The parabolic SAR is on its way down. It's just above this envelope, which means there's a little bit of support here. So it's either going to break through or it's going to bounce like it did yesterday off this little dotted line envelope. And then finally, the Genius indicator is still indicating negative, which means none of these things are really great for a bullish market. And then this morning on a macro level, the Swiss decided to do this crazy thing where, you know how if you go put money in a bank in the United States, they pay you. They don't pay you much, but they pay you a little bit. In Switzerland, they said you got to pay them to put your money in the bank. And that creates all these problems in the Swiss market. It's created problems in Europe. It's making the dollar go crazy. It's making the Swiss franc go crazy. And it's affecting all kinds of markets worldwide. And this, folks, is what happens when you start printing crazy money. Even though we're printing money, it affects the rest of the world. And so all these bubbles are getting created around the rest of the world. And you're seeing it effectively in the markets. You're especially seeing it in the commodities, in gold and oil. Gold is up like 2% or 3% today. It's crazy. We put out a gold report yesterday that said we think we're seeing a bottom in gold, at least short term. And here we are up 3% based on this Swiss news. So, we saw what's happened with oil. We saw what's happened with copper. So a lot of negative deflationary things, and the Fed's not printing. And when the Fed isn't printing, that means that there's no support. There's not a lot of money that's going to be buying the stock market. So we kind of think that longer term, we're in for some downward pressure. It's red, so stay short if you're short, or start tightening up, taking some of the profits. Don't go long just yet. And if you're in cash, stay in cash until we get a green light.